Oh, that's where you guys live? Oh, I live there.
Correct.
She's so round in her belly that it takes up my leg. She's like so round.
I'm in enemy territory here. I didn't realize. I've been here.
You literally have
No, I have a lot of options. The people.
Okay, anyway, so. These and I walk past it.
It's only a 9,000 seater. Yeah.
So remember,
Because- Sure.
Hey, the purple.
That's a crazy,
No, they lost.
Yeah, well, I know what mine is. I hear it staying, I'm working on this house.
I don't have my notes. Last year, I did. They were wrecked.
You guys in the NBA?
Every year.
Yeah. She needs to go.
Great.
File it down.
You don't understand. You don't understand. Oh.
Yes.
They smell like, no, seriously.
I already lost my.
For my blood pressure, and for my blood pressure.
My best friend is. I've been.
I'm waiting to.
I did.
Yeah. They don't have to test me. Out prior to the game. No one's got that.
Victor Tom. Becky, lean in. More. Slide. Logan, I can't see you.
Minnie, get out here.
Minnie's in. Okay, good. Let's go.
How long does the presentation usually last?
Depends on the realtors. Usually an hour though. I mean, I can do them in 30 minutes, but I get so many questions. It never seems to.
If it goes with questions to an hour, that's fine.
Yeah, that's usually what it is.
I've got some questions too.
Yeah, I dip off the back end of my prezo because it's not a mortgage office, so I don't show them like the portals and all that stuff that you guys have.
Right.
But yeah, everything else, just the education portion.
All right. I need more food.
How are you?
I have seen
We need salads, we don't need curries. So my salad
I had
consists of like marinated cucumbers, marinated onions, tomato, little corn, olives.
Wasn't that around the time when this? Yeah.
They didn't have breakfast the night before.
Yeah, so.
But they always say around.
Yeah.
I didn't want to say,
What?
No worries. What time do you got something else going on?
Yeah, because this was an hour out. Here over at Richmond. So I just had some more appointments in Richmond and drove over here. So I am in no rush. Driving back there and fly out tomorrow night. Well, that's good. You still drew the crowd. I didn't. You still your food. That's why.
Usually it's about
Right. Oh, this is perfect. I just did one at the Hudson Valley Real Estate Chapter in like Hudson Valley, New York area. 400 real estate agents there. I had to talk on a microphone. It was the weirdest thing I've ever. I know it was still great. I got a ton of questions, but I was followed by a judge that was talking about like real estate law. It was a really weird setting, like a formal dinner. So yeah, this is more my speed. I like the good crowds of like 10 to 15.
Yeah.
Much more engaged.
Before I forget, I have a credit report.
Okay. Yeah, sure. Absolutely.
She called me up and told me her credit score was really low. I didn't. I haven't.
Okay.
It's like 50 pages. So I didn't.
Oh, cow. Okay.
Yeah, because it's, you know, way more information.
Sure. Yeah.
I think we're ready to start. All right, thanks for coming, everyone. There's food left if anybody needs it. So today we're going to talk about credit repair, and coming in from Colorado is Randy Dillo from National Credit Care. I've used that company, using them now for some of my clients, and had some luck turning them from ineligible credit scores into buyers. So there's a time and place for credit score, and I think repair, and I think a lot of people could use it. Even if you've got decent enough credit, there's money to be saved by getting a good credit score. Just know that. So we'll get, I'm gonna let Randy take over, and then we'll have time for questions and everything after that, and talk something we'll do fun.
Cool. Thanks, Jay. All right, so if I go speak loud enough, please just like throw something at me, but I'm pretty loud and winded, so you
You might get bored of me. I want to give you kind of my background because it does kind of play into what I do for a living. This does not play well, as we were just talking about, in this location, but I went to Duke University, so everybody can boo, throw things, that's fine. I always wear blue because of it. But I got a degree in electrical engineering. I love math. I love every bit about math. After I got out of university, I went to join the Air Force, and I was a combat comm officer working on the satellite program. And then decided, all right, now that my time is done in active duty, I'll go be a government contractor because that's just what people go do. I realized really quickly I hated it. Like, I could not stand it. Payday was great. I love payday, but I hate everything about working for the government. So I was an athlete at Duke, and I decided, you know what, I really just want to go back to my roots and figure out what makes me happy. So I decided I'd go be a personal trainer. And I didn't know if I'd make like $50,000 a year if I was lucky or worse. But I didn't care. That's what I wanted to go do. So I quit everything job-wise, had luckily enough savings to make this work, and went off to be a personal trainer in Colorado. Now I realized really quickly in Denver, it is a massive fitness hub for the entire country. I did not have to worry about making money. I made a lot of money as a personal trainer. And then I moved up through the ranks of 24 Hour Fitness, ended up being a district manager, running 18 different health clubs. At that point, it was like that next decision. What do I do now? I've kind of capped out where I want to be with 24. So I decided to open my own. So I went into business with a few partners. We opened our own health club. I ended up opening up 2 more for a total of 3. Those I owned by myself. And then about 2 years ago, I sold them to LA Fitness. And I didn't know what to do with myself. Like, what do I do? I love sales. I love talking to people. And what I really narrowed it down to is I like helping people, right? That's what being a personal trainer is. A good trainer is really about helping them client from especially like their worst point to their best point when it comes to health and fitness. That's exactly what I do for someone that's working with credit problems, right? You guys probably know this more than anybody being realtors, but most people will look for the house for the approval. So they already have it in their head that they're getting that house. They found their house, they're ready to go. And I know you try to push them over to Jay or others, but that's just not what people do nowadays. So once they have that in their head and they don't get it, that's like their lowest point. And it's how can I take them from that point and bring them all the way back to that closing table. That's really what I strive for, and that's what I love doing. So long story short, kind of my background, but I do take this business very personally. So if you're working with me and through Jay, it's important we all know each other. So that's why I tell you that. So anyway, let's talk about the company a little bit. So if this works, of course it won't work now. We tested it. No, it doesn't work. That's all right, though. This computer's from like 1985. I'm pretty sure that's why. Okay. So some of you already heard me talk about this, but I travel about 40 weeks out of the year. I live in Denver, Colorado. That's where my company's based. We're a 260-person office. All we do is mortgage-based credit. Doesn't mean I can't help someone that's not in the mortgage process. It's just not our focus. We focus solely on that mortgage approval process. But me personally, I'm a senior director with the company. All that means is I have a lot of territory and I travel more than everybody else, like a junior director would. So currently I run basically the Northeast corridor. Not everything's listed there. I run New York, Virginia, Maryland, and then all the way up in New Hampshire, Vermont, Maine, as well as Connecticut. And then they just for fun gave me Georgia, because why not put me completely into a different territory. So basically I travel a lot. If you ever want to learn how to get hotel points or trick the system when it comes to that, I'm your guy. Been doing this a long time. But the reason we're in business, and this is the most important part. So everybody knows the Federal Trade Commission, right? Everybody understands what they regulate. Private entities, though, so the credit bureaus themselves are not really government entities. Everybody understands that, correct? Like it's a company. They're a for-profit company. They hold the keys to all of your credit scores as well as all of your, clients' credit scores, but they're just a private company. What they are is they're a data warehouse. All they do is take data in from creditors and put it through an algorithm that we'll kind of talk about to get a score. But the Federal Trade Commission took a really big black eye because about 10 years ago, there was a report that came out that determined 80% of all credit reports have some sort of a detrimental error on it, right? Just straight errors. I'll give you an example. I pulled a credit report last week. There was a lady that had her house, her mortgage transferred from one company to another. On TransUnion and Equifax, it showed paid closed, and on Experian, it showed foreclosure. Like, obvious mistake, but that's crippling her experience score, right? So it's just, it was in the gutter, everything else was great, it made no sense, but those are the kind of errors that are just out there. So the FTC said, what are we gonna do about this? How can we combat this? So they came out with what's called the Fair Credit Reporting Act. That act is great. It says that everything on your credit has to be 100% complete, accurate, and verifiable, 100%. And that's awesome. However, how are they gonna enforce it? There's no penalties for violating it. There's no fines, there's no fees, there's no anything. So they have this great act, and then the credit bureaus would love to be accurate, but they don't really care because they're not regulated by it. So what do? So we're actually licensed by all 3 credit bureaus. We're the only firm in the country that has that licensing agreement. What it means is I joke that we're the police arm of the credit bureau. We enforce that act. We're the only company out there that will hold creditors accountable for their actions. You better dot every I and cross every T, or I will get things removed off of people's credit if it's theirs or if it isn't. Okay, so that's why we exist. If you really look at what those 80% of errors are, it equated to like 40 million errors on credit reports. And this was 10 years ago. So you can imagine it's just got worse and worse and worse. Working with my service, we average a 20-point increase per month and 4 deletions across all 3 bureaus. So every month I'm working with clients, we're gonna get them around 20 points. I've seen as much as 100, I've seen as low as 10, but that good historical average is right around 20 points a month that I'll increase people's credit scores. And that could be the difference. 1 month could be the difference between approval or not approval. That's usually not the case. Jay would love that if that was the case. It's usually more like we need 4 months, but if they only needed 20 points, that is one way we can do things, okay? We're gonna talk about math a lot. It's super boring and I'm a nerdy engineer, okay? So ask questions, otherwise you'll probably hate a lot of this. So think about your personal instances, think about people you've worked with. Please ask questions as we go through this. But let's talk, everybody familiar with the term tri-merge credit report? Yeah, everyone's nodding kinda. So basically if you send a client over to Jay, he's going to pull what's called a tri-merge credit report most of the time. What that means is I'm taking all 3 bureaus, Experian, TransUnion, and Equifax, and then I'm throwing out the high score, I'm throwing out the low score, and I'm using that middle score as your mortgage eligibility score. So that's the key, is that middle one. Now, out there, people will come into Jay and they're gonna say, I know my FICO score. Jay, I've got a 620, here's my Credit Karma, let's go get a loan. Right? They're not wrong, it is a FICO score, but I wanna kind of put this to bed once and for all for you guys so you understand it. So there's 54 algorithms approved by FICO, okay, 54 of them. Credit Karma uses one of them. It's true, it's FICO, however, it's a consumer confidence score. Credit Karma's not lending them money, so therefore it's not a very strict pull, right? They're gonna use a consumer confidence model. And number 2, you're not paying Credit Karma for that credit score. So the entire reason they're doing that is for you to click on their advertising. So if they inflate your score, therefore inflating your ego, you're more likely to click on their advertising for their secured credit cards or their credit monitoring or whatever it might be, the offer of the day. That's how they're getting revenue. So it's kind of a farce in the fact that it's a credit score and it is a FICO score, yes. However, on average, it's about 40 to 60 points inflated for the normal consumer. The better your credit is, the more accurate your Credit Karma is. So if you're a 780 credit, probably close to a 780 in Credit Karma, because you just don't have a lot of deviations. That's why. As soon as you start having deviations and you're in that 6,500 range, that's where Credit Karma will start to be a massive gap in your scoring. Okay, so any borrower that comes in and tells you they know their Credit Karma, you're going to understand that that may not actually be their credit score. Okay, let's move on. So if I were going to take, now there's 54 algorithms like I talked about. There's 7 that are approved by Fannie and Freddie, and there's 3 that are actually used today when it comes to the mortgage industry. Those 3 are Fair Isaac version 2, Classic 04, and Beacon 5.0. I know you guys don't care about that, but you know them as TransUnion, Equifax, Experian, okay, in that order. So those are the algorithms, that's the math. Now you want somebody like me that understands that math and really understands how to manipulate and extract every point I can out of it. So that's why I bring it up, that's why it's important. But really, it's just the 3 credit bureaus. They use 3 different algorithms. Now they're really similar. So if I was gonna group them into like a graph, a pie chart, to show you exactly what those look like, this is the best guesstimate of how all 3 we kind of piece together, okay? So this is the breakdown of 100% of what makes your credit score. So first and most important, as you can see, 35% is your payment history. Kind of a no-brainer, right? Pay your bills on time, 35% of your score, you're gonna have good marks. This is also where things like foreclosures, repossessions, bankruptcy, late payments, all of those things only go into this factor. So feasibly, you could have horrible payment history and a good credit score. It's technically possible via the math. Is it likely? No. I mean, obviously, you probably have a mess if you have a mess, but it is possible, okay? It's only 35% of your score. So what a normal credit repair firm does, and I say the word normal because that's not us, normal would be they're going to file disputes. Disputes are a free service. Anybody can dispute anything on their credit at any time for free. When you pay somebody to do it, you're kind of paying them for their expertise, right? It's like if you were accused of a crime and you could defend yourself, or you could pay a lawyer to do the same thing because he's better at it. Well, that's a dispute. However, disputes were invented for fraud. So that's not what this is. 99% of the time, if it's fraud, I will tell your clients to dispute it. Why would you pay me to do something that's free? But most of what I do is not fraud. It is your debt. It is your mispayments. I'm here to be the judge and jury of did they do their job correctly, though. And we're the only ones that can do that because we're not doing disputes. We're actually launching formal investigations. Those investigations are patented. We have 42 patents on our investigations. No one else can do them. So that way we know that we're doing the right thing. And you're actually paying for a service that's different and works, not just a dispute you hope, okay? So any questions on payment history on what might be there? This is kind of the easy one. No, kind of figured not. All right, let's talk about the harder stuff. So a third of your credit score, almost 30% of your credit score is solely based on revolving utilization. Now, what does that mean? That means credit cards. So basically, if you have, let's take 2 examples. You have no credit cards at all. You're literally walking into your final in college to take your exam with a 70% for the best score you could ever get, because you're missing 30% of the test. So by not having a credit card, if any of your borrowers do not have a credit card, they're literally missing 30% of their points off the bat. Okay, so that's why it's so critical. And you ask why is it so important? It's the easiest way to assess risk, because you're able to use a credit card in a multitude of different ways. I could rack it up and never pay it. I could rack it up and pay it in full. I could rack it up and make minimum payments. You can see history and habits with a credit card versus your car payment that's just always the same on the same day and it never changes. There's no variety, so there's not as much risk involved there. So that's why credit cards are so important. So to have perfect utilization, anybody have a guess what utilization would be perfect? So percentage of your credit card that you use on a monthly basis would be perfect?
Less than 30%.
Good, that's a great answer. That's what most people would say, so that's good. Does anybody hear that, 30%? Okay, so 30% utilization is correct. That's where you start getting points. However, perfect utilization is 10% or less. So if you have a $1,000 limit credit card, you never want to go above $100 if you're trying to maximize your credit score. Okay, and you also want to use it though. You can't not use it because then you don't get utilization either. It's like a catch-22. Okay, so let's give you an example. Let's say you have 5 credit cards. So we'll make it easier. We have 3. You have 3 credit cards. You have a $10,000 limit card, you have a $1,000 limit card, and you have a $500 limit card, and they're all maxed out. Okay, so you have basically all no credit available, everything's maxed out, but you just got some money, you got $6,000 that you want to pay down your credit card debt. Where do you think we should put it? Do you put it towards the $10,000, $5,000, or the $1,000 card?
1,000.
All 3.
Yeah,
Get it to 10%.
Okay, but you only have $6,000. So if you want to boost your credit score, what do? Most of you got it, right? You're going to start at the bottom. And it's so counterintuitive because Dave Ramsey, I hear it all the time, well, Dave Ramsey says do this. Like, well, great. Well, Dave Ramsey is about investing or not using credit, but we're talking about credit score. That's not Dave Ramsey's thing. I'm going to tell you what you need to do because I work on credit. So you start at the bottom. You pay the $1,000 one off or down to 10%. Then you move on to the $5,000 one and you pay it down to 10% or less. And then you can move on to that $10,000 one. You work in reverse order because in that 30% piece of the math, you have 3 cards, they're each worth 10%. It doesn't matter that one's $10,000 and one's $1,000, they're exactly the same. So it is all about individual utilization of each card, not overall utilization of all cards. Yes, ma'am?
Interest rate though, what is that lower?
Not about credit. So I would say if you're looking for smart investing advice, yeah, of course you can pay down the highest interest rate one first. But if you're looking to increase your credit score, it could be the exact opposite. You're going to pay down the lowest one possibly. You just throw that out the window and you're just looking at balance utilization. But you're right, if I was trying to make good sound use of my money for investment. Yeah, because that's what people with good credit scores.
Does the home equity line go into this
Does not.
pie, or is it a different one?
I would say 90% of the time it does not. Depends. Some of them are revolving. It depends on they report on the credit report. Some report as installment, some report as other, and some as revolving. But most of the time I see it as installment. Just depends on how your bank reports it. I would see that on the credit report in one little letter. It's very simple to find out though. Other questions? All right, really quick for the realtors in the room. I know a lot of you.
A quick question.
Go.
What is the optimum number of revolving accounts?
One is fine. It's about mix. So if you have a 1-to-1 mix of ratio, so we'll get into it in a little bit, but if you have one installment loan, one credit card, one mortgage, that's completely acceptable and fine. Can it boost your score in certain areas? Sure, depending on how you're spread or other things. There's a lot of factors that go into that, but one is plenty. So if you have a client with none, they don't need to open 3. They just need to open 1. That's all they need. Okay. So for the realtors in the room, anybody in here max out their credit card monthly and then pay it off in full? I know a lot of people do that. No? Okay, cool. Well, then I'm not even gonna get into it. It's not worth it. Wait, I got one. I got a half raise. Okay. So I just want to tell you what happens. So if, and it doesn't matter, if you have great credit and you're doing that, that's fine, right? It's not a difference. But if you're gonna say buy a house or buy a car, something important where you really want to maximize and make sure your score is exactly right, the most important thing you can do is find out when that credit card reports to the credit bureau. Okay, that is not the statement date all the time. It's not the due date. It's going to be a specific date where they report your balance. Once you know that date, you can run up that credit card as much as you want until about 2 days before that date, and that's when you're going to pay it down to 10%. You let it report 10% used, then you pay it off on full at the end of the month. So you make 2 payments. It's kind of a pain, but it will maximize your scoring because otherwise they're going to report it maxed out every single month, which is lowering that 30% of your score every month.
What if you never use 10%? You know, your credit line is here, but you like never use, you're not.
As long as you
utilizing
use something. I don't care if you put a soda on it. 2 reasons.
As long as you.
Number 1, they won't close it.
Right.
That's the biggest problem. We'll talk about why that's important in a minute. It's actually the next piece. But number 2, it actually reports utilized. So that's what's important. If you have no utilization on the card, it doesn't give you the piece of the pie that you're missing.
Gotcha.
Okay, so even if you have like, I get a lot of people with Lowe's and Home Depot, like, well, I don't need anything. I'm like, they sell soda.
Yeah.
I don't care, it sucks, but go into Lowe's and buy a Coke every other month. Don't care. Just do it because it's gonna help your credit score. Okay, that's the problem with some of those niche accounts, Target, Kohl's, Lowe's, Home Depot, Victoria's Secret, like I see all of those all the time. Those little niche things, you've got to use them though at least every other month. Okay? All right, so that's it for revolving debt. Let's talk about length. So length, 15% of your score. This is why you don't want cards to close. Most of the time people always say never close a credit card. And true and not true at the same time. I'll talk a little bit about it, but here's the reason why. So length being 15%, it's a big piece. It's your ultimate goal in length is to have 25 years of credit history. I will never have it, and I'm going to tell you exactly why. Because I could have a 26-year-old mortgage, but I'm going to buy a car probably every couple of years because that's just what I like to do. I like cars. And the problem with length is it's the average of all of your open accounts. So if I had a 25-year-old mortgage and a 1-year-old car payment, those are the only 2 accounts I have, that's 26 divided by 2, that's 13 years. And then every time I get a little more length in something else, and I buy something else, it lowers my length, right? So that's the problem with length, and that's why it's very hard to get 25 years. This is also, you're seeing a trend why you don't see a lot of 850 credit scores. I've never seen one in 2.5 years of doing this. I've seen some 800s, but 850, it has to be so perfect that there's just no way. Okay, but let's talk about how we manipulate length. So as a company, when I'm looking at someone's credit report, there's a couple ways that I would do it. If I need to find you some points, one quick and easy way to do it would be authorized user. Has anybody heard of that before? No? Okay. So an authorized user is like, I call my grandma, who I know has had a Visa for 25 years. And I say, Grandma, can you add me to your Visa card as an authorized user? I don't need a card. I don't need to use it. I don't need to do anything. And what it does is to the credit bureau, it just copies her 25 years of credit history, all her payments, her utilization, everything directly onto my file.
Oh my God.
I get everything. Now, it can't be the only thing you have. If you have no revolving, most underwriters, when it comes to mortgage, will go, yeah, great, now you get your own credit card because you have to have your own. But it's a good way to boost length for someone that might have some credit cards that just needs a little boost. So that's one way. That's the easy one. Another one that I see a lot nowadays is student loan debt. So I see a ton of student loan debt that's in deferment, okay, meaning they're not making payments on it. If you go back, thank God I got scholarships. If you go back 8 years, let's say, to your freshman year, you haven't made a payment on that loan yet. If you take it out of deferment and make one payment, you inherit 8 years of credit history because it goes back to the date the loan was originated. Wow. So I can bump your score really quickly in that 15% by doing that. Okay, so that's another trick. Last one is the rarer instance of closing a card. It might make sense to close a card. This time of year, ideally, I see it a lot. People that went to Kohl's, Target, so on and so forth at Christmas, and they said, hey, you want to open a card and save 20% on your purchase, and now it's paid off and they don't even need it. That may make sense to close, because if you have a 10-year-old Visa and a 1-year-old Kohl's charge, that's lowering your length. I'm going to tell you to close that card, okay, and that's going to boost up your length. So there are reasons to close cards. Please never tell your clients to do it. Let somebody like me look at it, but there is going to be that instance every once in a while, okay? All right, questions about length? Perfect. All right, types of credit. This is the only one that I can't influence of the algorithm. It's the only thing I can't do anything about, but I want you to know what they are. It's 10% of your score, so this is where we talked about mix, okay? So, perfect credit requires you to have 5 things. We call it Mario. Should be easy to remember. Mortgage, auto, revolving, installment, and other. Okay, so you have to have a mortgage, you have to have an auto loan, you have to have a revolving account, credit card, you have to have an installment loan of some type, which could be a signature loan, a student loan, sometimes a HELOC, depending on what it looks like, and then other, right? That's the weird one. That's the low-hanging fruit that most people don't have. What that usually is on traditional credit reports nowadays is the Green American Express charge card. It's probably the best example. So the traditional Amex. The reason why that's not revolving is because if I have, say I go out and I put $10,000 on my Amex, I owe $10,000 at the end of the month. Okay, it's a charge card, not a credit card. It can't make minimum payments, so therefore it's not revolving. Okay, so that's why that's an other. That's the most obvious one you see. So like I said, I can't influence that. Most of the clients I work with are trying to get a mortgage, so they're already missing the first one, but that's a perfect mix. All right, last one is new credit. So this is the only part, yeah, go ahead.
You mentioned it, one of those that should be an auto loan.
Correct. Just have perfect credit. Doesn't mean you can't be an 801.
2 auto loans and you're 0, you still have 2 cards.
Yeah, no, so here's a great example of that. So I just had someone go to the closing table. They had a mortgage pull 45 days prior to closing, okay? So you guys probably know this. The process is if it's over 30 days, most of the time you have to repull credit before closing, right? They repulled credit at the closing table and they had paid off their car loan. Not on purpose, like their last payment came out. It closed their 6-year-old car loan, lowered their length of credit significantly, dropped them below mortgage eligibility. Okay, so that length is where you'll get hit first, but secondly, if you just lose it, you get hit on this little 10% per mix. Doesn't mean you can't have 801 credit and have no car payment. That's completely fine. I'm just saying to perfectly have perfect credit, you would have to have one of each type. Okay? All right. Then you're getting crazy into like trying to be perfect though. I mean, no one, if you're 740 or above, you're in great shape. That's really the kind of the cutoff, right? 720 to 740 and up, you're doing awesome. Anything below that, we're going to talk about how you're getting robbed, because you are. Okay, last one's new credit, 10%. So this is the only part of the math and the algorithms where you start with all of your points and you can only lose them. Okay, there's 2 ways you lose them. Number 1 is hard inquiries. So anytime Jay pulls someone's credit, they're going to get dinged for 2 to 6 points on that credit pull. Anytime someone goes car shopping, especially in the state of New York, they're going to get hit about 15 times because that's what banks do, or car dealers do. They shop you out, okay? If I ever want to give you some really hard advice, get pre-approved before you ever go buy a car. Do not ever let them shop you, because I've talked to car dealerships about this. They'll be honest. They're not in it just to get you the best rate. They get kickbacks from different banks and different programs and things too. So they're shopping for your best rate as well as their best deal. And by doing that, they'll shop you out to 10 to 12 banks on average. In the state of Virginia, it's about that. Okay? So always, always, always get your financing before you go to the dealership. Plus, it makes the purchasing so much faster and so much easier. Trust me. My bank lets me just write a check for my car and they convert the check into a car loan. I bank with USAA, it's like the easiest thing ever. I mean, I have to get pre-approved for it first. Can't just write a check. But it's cool that they just let you do that because it makes everything go so much faster and then they pull my credit 18 times. Okay? So that's one way, 2 to 6 points for an inquiry. The other way is you're going to deplete all of your points by opening a new trade line. So when I open a new car loan, they deplete as many of these 10% of my points as they can because they want to assess how I'm going to pay that car loan. Bank wants to make sure I make their payments, so they don't want me going out and getting more credit. So they try to deplete you as much as they can. Okay, and you can see on there, takes a little, I guess it's not on there anymore, takes about 90 days to start to recover most of those points, or half of those points, and about 120 to 160 to get all those points back, minus the inquiries. Those will stay for 1 year. Okay, they show on your credit report for 2, they affect your score for 1 year. Okay, questions? That's everything to do with FICO.
I was shopping for BMW.
Okay.
And I was
Smart woman. I love German cars.
gonna finance it
Mhm.
like I had before.
Sure.
The next day I went back to kind of do the paperwork and they said, well, we talked with the UVA credit union. We thought maybe we could get a better rate. It's like, I didn't give you permission.
Yep, and you don't. And that's why people like me remove them so easily because you signed for one credit pull and then they shopped you to a bunch of different banks. The funny thing is you'll start getting letters in the mail when you do this, usually from all these other banks saying you were approved or not approved or whatever. As you start to get those letters, every one of those is a credit pull that you didn't sign for. But that's pretty common. I mean, honestly, the mortgage industry is probably the best at giving signatures every time. And I won't put him on the spot, but I guarantee Jay doesn't get a signature every single time. See? I'm just kidding.
I have to have verbal permission.
Right, but without a signature, I can get that removed like that, right? Because I can ask for original documentation, he can't give it to me, it's gone. That's the point of what I do is, it doesn't violate the law by any means, but they're the best at it. Now imagine everybody else. If he's telling you he doesn't get a signature every time, I promise you Verizon didn't the last time they pulled your credit to see if they wanted to give you a new phone line. Like those are the things that happen, and every time someone pulls your credit, you lose 2 to 6 points, okay?
Can you talk about the grouping of inquiries, like auto dealers, stuff like that?
Yeah, that was my question.
What do you mean the grouping?
Well, because if you read the internet, if you're shopping in same industry, mortgage.
Oh,
or
you
something
mean
like
shopping
that.
window?
Yeah, shopping.
Sure, it doesn't exist. Pretty simple answer.
What?
The internet lies. So let's talk about it. There's one and one only shopping window, and it's for mortgage, and it's 2 weeks, and it's only on TransUnion. The other 2, you're going to get dinged every time. Now, here's why you don't see it. So if Jay pulls credit, and then they leave movement, and they go to, I don't know, Caliber, and they pull credit, the number will probably be the same. But guess what? Next month, when all that cycles, they're going to now show 2 hard inquiries on their credit, probably less than the 6 points because they do give you a little grace, but there is no window. TransUnion, however, for 2 weeks in mortgage will not affect your score whatsoever. You can do 100 and you get hit for 1. I know, I get this a lot. The funnier thing is when you get in a room full of mortgage officers and you ask them the question of what's the shopping window, and I literally get 3 different answers almost every time. Well, I heard it's 2 weeks. No, I heard it's 45 days. No, I heard it's 30. And I'm like, so what do you think the answer is? Doesn't that scare you that you guys are the best and you don't know that because there's so much false information out there? And I send out credit tips about this on a weekly basis. These are one of the ones that we hit home really hard. We know the
They
math,
don't exist.
definitely there.
Okay, they don't exist? Is
What,
that-
shopping windows?
Yeah.
2 weeks on TransUnion for mortgage owners.
Oh, okay, okay, thank you.
Now,
2 weeks TransUnion.
within industry, like you guys were kind of talking about, you won't get hit, say you get shopped 10 times to a car dealer. You're not going to get 60 points off your credit score. It'll be the lower end of that 2-point scale, but you're going to get hit for every inquiry. And they're all going to be in your credit report for 2 years, 1 year of impacting on your score.
Shopping window means what?
So there's a myth. I guess I can say that now. There's a myth out there that you can go and have your credit pulled 15 times in a 2-week period if it's all within the same industry. It's a good myth because it's permeated culture for like ever. I thought it too when I started working here. I don't know how it started. I don't know why. But the actual logical math behind it doesn't support it. It's just not true. There is, like I said, a sliding scale of how hard you get hit. It's similar to this too.
So a mortgage late, let's break this down. If you have a mortgage late with 780 credit, if you miss your mortgage payment, you can get hit for as much as 175 points for one late. But if you're a 580, they don't have 175 points to take. The worse your credit is, the less they take for impactful things like that. You have to understand, and let's just put this to bed now, all the banks, all the creditors, everybody out there, even your local bank, none of them are your friend. They are all out to get you. They want your money and they want it however they can get it, and the number one way they can get it is by having a lower credit score. Okay, your credit card companies, your auto loans, everything. And I'm gonna break down what it costs you on a yearly basis. It's insane if you're in the 600s. Okay? Yes, sir.
Just to clarify, I think really, were you just asking what is a shopping window? It just means that the belief that if I get my credit pulled 7 times during the shopping window, it only counts as one uniform.
Right.
That's what the shopping window is.
Yeah, I guess the difference would be if you do it 7 times in industry, instead of it being 7 times 6, 42 points, it'd be more like 7 times 2, 14 points. They do give you a break, but it's not a window. You will get hit. That's I guess the point there.
So that window varies, it isn't a specific time during the year.
It's 2 weeks on TransUnion. That is the only hard and fast rule in the entire mathematical algorithm for all 3 bureaus. In mortgage only for 14 days, you won't get hit at all. You'll get hit one time and nothing else. But guess what? If TransUnion's your high score, who cares if they never get it, because we still throw that score on. That's the problem. So you have to be careful having your credit pulled. Okay, that's the bottom line. Anytime you're at a store and they want to offer you that card, that means you're just in your head, no, that's 6 points off my credit score. And then if I open the account, it's more, right? Then it's all of my new credit points. And again, these all come back to you. It's not forever. It's not even the 7 years like other things are. It's at worst a year, and as the year goes on, it gets less and less impactful. Okay.
So if the bank pulls it as opposed to an auto
Mhm.
case, is it still gonna?
That's one pull. You will get hit for that one pull only.
So regardless of whether it's a bank or an auto location. it's still
If
gonna be the same
anytime-
points?
Yep. Anytime you go to get new credit of any kind, they have to do a hard pull to verify your credit and to give you money. So you're going to get hit. What I'm saying is not to go to the car dealer because they're going to do it 10 times, where your bank is going to do it 1 time.
Because they're shopping.
Exactly.
They're shopping demo car dealerships.
And they'll tell you the same thing. The finance guy at the car dealership will be like, "Oh, there's a shopping window. You need to worry about that." But he thinks there is. I'm not saying he's lying. He literally, most of the mortgage officers think there is, because it's been in our culture for so long that there is, and there is. It's just not what everybody thinks it is, right? It's 14 days on what bureau. The good news is most car dealers use TransUnion only. They don't do a 3-pull credit report, so that's kind of good. So it may not affect you if you do it. It's bad, but you know, when you're doing a mortgage pull specifically, it's all 3 bureaus. They're going to make sure that they know your full picture. Okay. All right. So let's talk about what I can remove. The fun stuff. It's everything. There's literally nothing on a credit report I can't remove. However, there's ease of removal to hard. Okay. So let's break down the easy stuff. When you have a client that has a whole bunch of medical collections, I'm doing the happy dance in the middle of my office. It is the easiest thing on the planet to remove off of credit. And I use HIPAA against fair credit reporting. I ask for doctor notes, admittance records, all kinds of stuff I know they can't give me. When they can't give it back to me, I win. It's a game. So medical's awesome. I love it. We can throw that off within usually the first 1 or 2 rounds. Next easiest is $0 balance anything. So if you had an old mortgage, you sold the house, but you have late payments that are still on your credit, much easier for me to remove because the money's not there anymore. So why would the bank really care to fight me when they've already been paid? Okay, so that's kind of the $0 accounts. Those are easy as well. Then it gets into harder stuff like traditional collections. So now we're talking like you actually owe money to the creditor and you didn't pay your cell phone bill and they're going after you under collections. Now I remove those without them being paid all the time. However, it takes more work. I have to poke holes in it and find out where the hole is before I can remove it.
And it's just off your credit report. You still owe that
You don't.
money.
What leverage would they have over you if they weren't hurting your credit? I mean, technically, yes.
Okay.
If they sued you and a judgment came out, you owe that money.
Right.
The chances of that happening are 0.001.
Well, they do have the medical bills though.
They
right.
say they do.
Okay.
So how many times have you heard of stories of like, well, an attorney contacted me about this, I got a letter. Were you served with legal paperwork to go to court? No, and you're not being sued. You know if you're being sued versus you have a lawyer that's a collection agency to scare people. That's the difference.
I'm going to talk about this a little bit later, but I have two clients that have, two separate clients that have had really devastating experiences with children in UVA and
Mhm.
had heart surgery. And so they have, of course, the medical is really filled up. And I'm trying to locate a home for them. And based on good credit score, I don't have 650.
Right.
So they have all these medical bills accumulating, both parents do, and it's just so devastating that they can't find a home. They sold their home and they're looking for a rental now. And now, what can I do to help them be able, like you said, to be able to remove that medical,
Sure.
to be able to provide that?
Well, you pass them to Jay, so you get a real poll. Find out their actual score. Because a lot of times what people think and what's reality could be totally different. He might have a program that can help them without me at all. So you get over to Jay, he pulls credit, sees where they are. Now, if they're not mortgage eligible, he's going to get them to me, and that's the work that I do for them on their behalf. I work for Jay, for you guys all for free. I don't charge anything, right? Charge the clients a very little amount, which we'll talk about. But by getting them to me, I'd rather them get to the house, right? So you wouldn't want to send it directly to me and be like, hey, can you help these guys? I don't know, they might have been mortgage eligible already. I don't write mortgages. So getting them to Jay is the first step. Make sure they get a hard credit pull. They know where their credit really is, because medical bills and medical collections are two totally different things. I can't help you with medical bills. You need to pay them, or they're going to go to collections. Now, once they go to collections, then I can help, right? Now it's on your credit report. Bills are not on your credit report. Collections are. Okay?
And let the experts do it. I mean,
Yeah.
bottom
Oh,
line.
no, I just met them. I mean,
Yeah.
that's right. I mean.
How do we get a mortgage pull?
I mean, they had just said, I just lost my house, I'm paying the rental, this is what my situation is. And
They lost their house, like foreclosure?
well, they had to sell it
Oh.
too, or one, I don't want to discuss it.
There's probably a lot of things on there that I need to work on.
Yeah, I
Let's put
don't
it
know that exactly too well, but, just met them like 2 days ago.
Mhm.
And it was kind of shocking that I met two people like, in that situation where their children have been, here at UVA, and, just seems like it just goes so quickly, right under their score, and they're just, fine, just,
Right.
just.
And this is what happens. It takes years to recover, and even when they recover, it doesn't recover on their credit. So I see this a lot where I have somebody that's credit is kind of rebounded a little, they're still not mortgage eligible, and it's from something that happened 4 years ago. That's super common. Because here's the problem with collections, just so you guys understand this. You guys are kind of front line. So this, if you're gonna take anything away from today, take this one thing. If you have a client that says, I don't think my credit's that great, I'm gonna work on my credit, please God stop them from ever doing anything other than talking to Jay or
It could make it worse.
They will absolutely make it worse. And there's one reason why, and one and only reason why. They're going to pay off collections. That is the worst thing you can do for your credit. But it's what everybody thinks they should do, because logically it makes sense. Well, I know I have this collection from Sprint, and I have this other one from the doctor's office, and I have this other one from Comcast. I need to pay those off before I get a house. What happens is this, okay, so a collection hits your credit. The day that it hits your credit, you get dinged for the worst points possible. Doesn't matter what the dollar amount is, you have a collection. A collection is its own entity, okay? It could be 0 or it could be 15,000. They're exactly the same because it's just a collection. Now, as it starts to get older over time, it gets less and less and less impactful. So it starts to give you some points back, and it gets older and older and older. You're getting all your points back, and ideally it's going to be 7 years and it just goes away. You never paid it, 7 years statute of limitations, it goes away. Okay, so now reality, it never goes away. Because what happens is they sell it to one collection company, they wait about 3 years, they never heard from you, never got any money, they're going to sell it to another collection company that's brand new. And then it's going to go 3 or 4 years, and then they're going to sell it again. Okay, so it'll never go away. But here's the other rub. If it goes about 2 years and you haven't paid it, and then you're going to go work on your credit, and you go pay that collection off, you maybe make a settlement, you pay it in full, whatever it might be, guess what they do? They don't delete it, they make it $0 and brand new again. Because all they're going to do is delete the debt. They're going to say, we will absolutely delete the debt off of your credit report. Great, I'm going to give you $500, and they're going to make it go away. What they do is they give you, or they take your $500, they make it 0, but it refreshes what's called the data blast activity. Every time you talk to a collection company, they can refresh DLA. And DLA is all that matters on your credit score number. This is the problem. So if you ever hear a client saying, "I work on my credit," please God, stop them and get them to the J to talk first. Okay? All right. Okay.
What's divorce-related items?
You want to hear my story, or do you want to hear like what it is?
Let's hear the story.
Story. Okay. Bob and Sally met. They got married because they loved each other to death. They had bought a house and they bought a dog. Serious. They bought a dog. And then they met the judge like 5 years later because they realized they didn't love each other anymore. And Sally got the dog, and she got the house, and Bob got a bunch of credit card debt. Okay, they went their separate ways. Bob started renting. He paid off all the credit card debt, did everything he was supposed to do, went to Jay and said, "Jay, I'm set. I paid off all my credit card debt. I want to get a house." Jay pulls his credit. He has a foreclosure. He has a bunch of vet bills that are now in collections. And he says, no, those aren't mine. Sally, on the divorce papers, those were all her responsibility. And Jay gets to have that really hard conversation where he says, it doesn't matter, because when you opened the debt, the mortgage, you were co-debtors. And now that you're separated, that's not the bank's fault, that's your fault. So you're just as responsible for that foreclosure, even if your divorce decree says you weren't. Okay? So that's what a divorce-related item is. Now, how I would attack that under Bob, I wouldn't help Sally because Bob's my client. So Bob, I'm going to actually do our investigation process to get that foreclosure removed off of his credit. And I'll tell you exactly how I do it on the next slide. But that's what an item would be. Okay. I do remove bankruptcies as well, and bankruptcy items. They're two separate items. They're two separate things. However, if I remove it from credit, doesn't mean it's off your public record. If you still file bankruptcy, it's still there. You still have to meet the guidelines in order to get a mortgage, which is usually 24 months, but I'll get it off your credit, which could be a huge boost in your credit score.
So I have a question.
Yes.
Regarding, I'm
Sorry,
sorry.
you've been waiting a while, sorry.
It's okay, no worries. On the medical aspect of it, so I guess maybe another myth. I've always understood that, yes, if you have a medical situation, you have a lot of debt, you work something out with the hospital. Even if you can't pay what they're requesting, as long as you pay something to keep it consistent, showing an effort.
With the hospital, yes. They
Okay.
won't turn it to collections.
Okay.
So it's still a bill.
Right.
Absolutely, you're 100% right. The second they turn it to collections, you don't want to pay it anymore. You want to let it sit. And then you also hear this a lot in the mortgage industry. Oh, medical collections don't count. You hear that all the time. And it's true. Underwriters will overlook. You could have $50,000 worth of medical collections. If you have a 780 credit score, they will not care. Because medical is rampant on people's credit reports. However, if you have $50,000 of medical collections, you probably don't have a 780 score. Because guess what? Credit score doesn't overlook collections. That's the problem. So you can have a decent credit score with medical collections still going to work, with them open and active, and maybe don't need it. But you'd have a lot better credit score if those were removed. Okay? All right. Let's move on. So how do I do it? It all sounds like magic, right? It is. It's magic. I go and I sprinkle this special dust. No, I have a $900,000 mail machine. That's the magic. Seriously, it's almost $1 million machine that sits in a room all by itself. We send out 50,000 letters a week on behalf of our 400,000 clients. That's the magic, really. But what we send to those letters are those investigations under FCRA, right? We're trying to verify, we're trying to make sure it's accurate and complete, and that's what those letters do. But ultimately, the reason I'm more successful than anybody else out there is that mail machine, it's the volume. That's really what it is. Because if I inundate them with so many requests, even if Sally just dropped the letter behind her desk and forgot about it for a week, I will win if it goes past 30 days. Regardless of if it's real, if it's accurate, if it's all verifiable or not. If they just don't answer the letter, I still win. Okay, so let's break down how I do it. First is I'm going to look for surface errors. This is the easy stuff. This is like that foreclosure versus paid close thing that I kind of open with. That's just an obvious error. I'm going to win that very, very, very quickly because it's just something that's wrong. Okay, so that's the simple stuff. No data loss activity, unknown. I see a ton of like, and I'm sure Jay sees this all the time, unknown medical. You see these collections that just say unknown medical. Like, you wouldn't even know who to pay. If you wanted to mess up your credit and pay them, you don't even know how to write a check. It's crazy. So that's all missing information. That's not 100% complete. Next is non-verifiable. I always give two examples here. So One good personal example and one bad, more likely example. Personal, I bought a car right before my cruise last year. I go on a cruise every year with my wife. Last year I bought a car and the car payment was due while we were on the cruise. And I totally forgot about it. Missed the car payment. It was the 11th day after the car payment that I realized that I hadn't made it. I called Jaguar Auto Finance and I'm like, oh my God, I messed up. I need to pay this car payment. What can you do for me? And they said, no worries, we'll waive the late fee. It's your first one, we get it. All good. Paid the car payment over the phone, everything should have been fine. Next month, I have Credit Karma, which I joke about. It's awful, but it's good for monitoring. Tells me things happen. I get a new 30-day late on my credit. So of course, me working where I work, wrong guy, wrong person to talk to. I wrote them a really nice letter that explained that they needed to prove it to me that I was 30 days late. They couldn't because I wasn't, and therefore was removed from my credit. A lot of these systems are just automated though. So I was late, 10 days is the grace period, off to the bureau, I was 30 days late. I just wasn't. So that's a good example. The more likely example of what you're gonna find is like certain person A didn't pay their cell phone bill to Sprint for 90 days, and then they decided I'm not ever going to pay Sprint again. I'm gonna go to AT&T and get a new phone, and now Sprint puts a collection on their account for $1,000 for the stupid phone and all the service they didn't pay for. What I'm gonna do to make them verify that is I'm gonna go, so Sprint's out of it now. Sprint's done. Sprint sold it to Portfolio Recovery. Portfolio Recovery is a collection company. Now to verify it under Fair Credit Reporting, I can ask for anything. So I'm going to make them verify all of the accuracy of the original signed documents from Sprint saying that they had a lease on their phone. I'm going to ask them for account information, payment records, anything I can that I can ask for legally, but the collection company isn't going to have. Okay, so that's the game that I'll have to find. They bought the debt, they didn't buy the account. So I'm going to find a hole in there of something they're not going to be able to answer, and that's how we do it. Okay, so that's the good and the bad. 30-day time frame. That's literally the mailman. He hates me because I take pictures.
Is this a day?
Yeah, that's a day.
That's a day.
That's a day. It's right around 10,000 letters a day. So that's like 8 bins, I think, that day. It stands like this high. They're about this wide and they're full of letters. That's one day. So I take pictures anytime I see a big load and I throw them in my presentation. But really, that's the 30-day time frame, right? So the day it hits the credit bureau, they have 30 days to respond. If they cannot or do not respond in 30 days, I win. But if I do it through the mail, it makes it a lot harder because once I start it through the mail, they have to answer through the mail back to the credit bureau. Everything goes paper. So we use snail mail to make it harder on the 30-day timeline. Okay? That's the only reason we do it. It'd be much easier and our life would be simple if we do electronic, but we wouldn't win as much. So that's why we do it that way. And then the last one's my favorite, economics. If you have a $30,000 collection and they're verifying every single item, I will still eventually win because there's a point where they just say, I don't want to talk to National Credit Care anymore. I'm so tired of them. And it's not one client, it's like my 18 clients, and I'm getting 3 letters every week from the same company over and over and over. And eventually it's just not worth their time or their money anymore. They can write it off on their taxes as a loss and move on. Okay, so that's really the hardest point. And that's those bigger ticket items where there's money involved. Like I had a $56,000 repo removed a couple months ago. It took 6 or 7 months, but it really wasn't because I found an error. It was because they just didn't care anymore. They gave up. Okay, and that's where we have to get sometimes with some of these items. All right, cost, and then we're pretty much done. Normally, I charge $189 to get set up. Your Attorney General in the state of Virginia, I forgot to mention, I'm licensed by all 50 Attorney Generals and Puerto Rico. Every AG has kind of different pricing. Virginia is like the most strict, which is awesome for your clients because normally it's $189 in every other state, but in Virginia it's $15. He doesn't let me charge an upfront fee. The $15 is literally my true cost of pulling a credit report from the credit bureau. I have to pass that on legally because it's their credit, so it's $15 per person to get started. Allows me to do that soft pull of their credit. It's a master copy. I'm the only firm that can actually do that. It's a deeper dive than even they can get. Because it's right from the bureau system. So once I have that, it's $89 a month to month after. No contracts, no commitments. My goal is to get them back over to mortgage eligible as fast as I can. Average client, 3 to 5 months. That's probably historically right around our wheelhouse for an average client though. Again, it's not magic. It's gonna take time. And when I say average, I'm talking like your 570 type credit that needs to be 620, 640. That's the average client. We're looking at 3 to 5 months. If you send me a 400 something credit, that is not 3 to 5 months, I promise you. It'll probably be never, because they'll give up or they won't do what we tell them to do, because likely a lot of those people just are never gonna have good credit. But in a rare case, they wanna work the entire time, that's like 20 points a month, you can kind of do the math, it takes time, okay? All right, questions? I do have a lot more for real estate, or for brokers, but not for real estate, so that's kind of it for you guys.
Do you have?
Wait, I do have one more slide for you, I forgot, but I'll answer your question first. No, I don't.
So,
No such thing.
college students with a bunch of debt, first-time buyers.
Yep.
Sounds like they're a hard one to qualify. Is there,
I mean, I don't factor debt to income into credit, it has nothing to do with credit, so that's a J question for sure. Debt doesn't mean you have bad credit, debt can mean you have good credit.
but yeah.
I have a lot of debt, I promise you, but I have good credit. It's not to pay my bills. So, yeah, DTI and Jay's world is different than credit, right? And I get that asked a lot. Well, I make $100,000 a year, just to throw out a thing. I make $100,000, doesn't that mean that that's factored into my credit score? No, they don't know what you make. The credit bureau has no care what you make. I just showed you all the math. Nothing is about that. Yep, that's what matters. I do have one more slide, I forgot. This is the most important one too. So this is for you guys personally in the room. I told you I'd tell you about cost of credit. So this example is me versus a 620, 640 credit score. That's what I run into a lot. People with a 640 credit score say, oh, I have good credit. Great, what's your credit score? It's like 640. That's not good credit. Like, let me explain what that really means to you. The reason they think it's good is because they can get a mortgage, they can get a car loan, they can get a credit card. They don't realize what they're paying for these things, these items, right? So I'm about a 780 rolling. I kind of ebb and flow a little bit depending on the watches I buy in the Caribbean or something stupid. But the obvious answer here is if you're above 720 or 740 versus 620 or 640, here's the cost. So your car insurance. Most people don't understand this. Your car insurance is credit-based more now than your driving record. So if I have no tickets and accidents and a 750 credit score, and this person has no tickets and no accidents and a 640 credit score, they will pay $1,300 more on average per car per year in car insurance. Nothing to do with driving. Like, I don't know why that makes you more likely to run over a little lady in the parking lot, but that's the reality of where we are right now, okay? Credit. People are getting turned down for leases, they're losing security clearances, they're not getting jobs because of their credit score. It's getting worse and worse and worse, but car insurance is one. So everybody know the time value of money. Has anybody heard of that term before? 7%. So if I'm investing my money, I should expect to receive 7% plus on my return of investment, okay? So let's just use 7% on $1,300. So $1,300 a year, if you put into your retirement account instead of giving it to Geico, is $80,000 in a 30-year period that you just lost from your retirement account for your car insurance. If you're a two-car family, it's $160,000 for your car insurance. That's insane. That's 2 years of work for almost anybody out of extra work you have to do instead of being retired. Okay, and then it gets worse. Car loans. Average median price of a car in America right now is $30K. So on a $30,000 car loan, I go buy it and a 640 credit score buys it. They pay on average 13.26% interest. I pay 2.9 or less. Okay, so let's just use 2.9 and 13.26. You put those two together on a 5-year car loan for the exact same car, they pay $10,800 more in interest than I do on a 5-year loan. That's mind-blowing. Like, my car's not faster, it doesn't have better options, it's the same car, and they bought almost a whole nother half a car on top of it for the same thing, okay? Put that into your retirement account, it's $85,000 per car that you buy in your lifetime on your retirement, okay? And again, this is with good credit, 640s. We don't even talk about 500s. Okay, credit cards. So creditcards.com says the average interest rate of a credit card for a 640 credit score is 23.23%, including store cards. For me, it's 10. It's 9.9. Okay, and that's if you're dumb enough to stick with a credit card that charges interest. I just roll on to another zero interest deal, like most people do, right? But if I were going to do that on a 9.9% interest credit card and a 23% interest credit card, for every $1,000 charged, if I made minimum payments, I pay $200 of interest, they pay $800 of interest. It's $600 more per $1,000 charged over your lifetime. Okay? Imagine this all adding up. So your car insurance for multiple cars,
your car payments for multiple cars. Now, every $1,000 charged, all out of your retirement account, we'll conservatively say it's $2 million, roughly, okay? $2 million out of your retirement account because of your good credit. Then the big one is real estate, kind of the reason we're all here, home prices. So everybody guarantees two things, death, taxes. I have to guarantee those two because they exist and it sucks. However, the other two that I'm going to tell you is you're going to continue getting robbed blind if your credit is not above 720. It's going to get worse. And then the fourth one is inflation is a constant number. Anybody that's been in this business a while can see exactly what I'm talking about. But let's just talk average home price in America 50 years ago. Any guesses what it was 50 years from today? Average home price?
What year was it?
$7,000.
7? Yeah, that's a little low.
24, 24,
Close.
26.
30, close. Almost 5. $32,000. Nationwide average of a home price 50 years ago from today was $32,000. Any guesses what it is today? Nationwide, not Charles. 320. I'll tell you right now, if 230 was the average price in Denver, man, I would be super happy, but it's not. So yeah, $320,000. So following the exact same rate of inflation, that curve, 50 years from today, how much is the average home price going to be? Constant. Don't debate the math with me, I'll win. Any guesses? How much? I wish. Close. $5.1 million. That will be the average home price in America 50 years from today. That's inflation. It's not a fake thing that people don't worry about. There's a reason you get cost of living raises. There's a reason gas has gone up from when I got my driver's license, it was under $1 to what, $4 almost now, right? That's inflation. And if you track it as an economist, it's a constant number. And then home value, that's what we're going to pay. So why that's important is that's $7 million out of your pocket if you don't get into a house today, right? So if I don't help your clients and you don't help your clients get into homes now, I used to joke they're going to be broke the rest of their life and work at Walmart, but they can't even do that anymore because they fired the Walmart greeters. They don't even have those anymore, right? There's not a lot of options. Your only way to get ahead is real estate. That's probably why you guys all do this, because you understand it. 95% of wealth in America is made in real estate. You know, my parents are pretty well off. They have good jobs, but most of their money didn't come from retirement. It came from selling their houses and moving into different houses, and that's where they made the most of their money. And that's what we're taking away from them by just telling them no, that they can't get approved. And that's why I'm so passionate about doing this, okay? So, last thing, if you guys don't have perfect credit, don't raise your hand now, because that's like a weird subject. But I need a business card from everybody here anyway, so that way I can, you know, kind of make some notes and send you some information. But most importantly, if you want a free soft pull of your credit, I won't charge you anything. Let's take a look at it. It won't affect your score. Just put a little star on your card or something like in pen that tells me to call you. If I don't see that, I'm not going to call you. I'm just going to start sending you information. But if I see something on there, I'll call you and do a free softball for you, okay? Completely complimentary.
So just a question about
Yeah.
the true cost of credit for, if you have a little body work done on your vehicle and the insurance company turns that into somewhere and it shows up on a Carfax report, is that considered an accident? Just collision?
It has nothing to do with credit at all, but I will tell you, yes, it shows up as an accident potentially on your insurance. Now, it depends. If you were hit, it's totally out of my realm, then yeah, it could show up as an accident on your car insurance for sure. Could. Doesn't mean it will, but it could. Most of these companies nowadays have accident forgiveness. You keep seeing this on TV. They'll say, no, it's all right. Don't worry about it. You haven't had one in a long time.
So educate me on Credit Karma, because often we hear that in this. I mean, we did talk about it, but often, like you were saying, our clients will come in and say this. But I know a lot of people do use it to monitor,
And they should.
and they know.
I
So
tell
they
my
should.
clients to use it to monitor, but I've also taught every client that I talk to or my team has talked to throw the scoring piece of it out the window. It doesn't matter. That's not real. It has nothing to do. It's like literally comparing apples to oranges because it's not a real score. But use it for monitoring, because if I get a new collection that pops up on my Credit Karma tells me I got a new collection. You can also use it to say, wow, Credit Karma says my score has gone up 42 points. Well, no, it hasn't, but it has gone up.
That's the key. So it's good for monitoring as long as you don't pay attention to the score and think that's your real score.
So is it also a good idea for them to take advantage of this, the one free credit report each year?
Can't hurt if they know what they're looking at.
Okay.
But how many people know how to get a 50-page credit report like Jay's gonna give me after this meeting and know what to look for?
Right,
It's like Greek.
because we get that a lot too, you
Yeah.
know. Well, I
Sure,
did
it doesn't
that,
hurt,
and
absolutely, to have it. I mean, if they brought that in and you gave it to Jay, that's awesome, because he knows how to look at credit report. But the normal consumer, they don't really know what they're looking for.
Yeah, most of my clients are not normal.
Bank, my banks, they have started offering credit score.
Uh,
How would that compare to a credit card?
Depends on what algorithm they use, but more than likely, they're not loaning you money, so it's going to be stricter than Credit Karma potentially, but it's not going to be as strict as like Jay. That's the only real credit score that you can possibly get is from him. It's the hardest industry, because you gotta think about it. If I go to buy an $80,000 car, that's a big difference from an $800,000 house. So of course, this car is not gonna be as strict as his pull in my $800,000 house. That's why. It's all about what you're borrowing. Hang on one second. Yes, ma'am.
I know you touched on this, but we're in the middle of, we sold our house, and we're in kind of in the middle and waiting for closing. But our son has said, once this is done, you've got your mortgage and everything, I want you to pay off, not pay off, they're all at zero now. But to close the store cards, several store credit cards. Because, and it might affect your credit for the time being, but you're not gonna do anything for the next, for a while. We'll have our house.
It will affect your credit in a negative manner if they've been open a very long time, for sure. If he's trying to test saying you don't have willpower, I can't get into that one. So use them or use them very small. But yeah, always leave them open. Unless they're new, right? If they're within the last year or so and you have something that's much older, sure, you can close them in a long time.
But if a kid can open it, it's best to use them every once in a while.
Periodically. And again, all this only goes to I taught you a whole bunch of stuff about how to maximize your score. Right now, for me personal, right? I have a maxed out credit card because I just bought something really expensive that I probably didn't need. But I also know I'm not buying anything in the near future on credit. So I can make that decision, and I did it because it's a no interest rate credit card for 2 years. I don't care, I'll just make minimum payments or pay off when I want to pay it off. But I can do that because I know I'm not buying a house. Now, if I was buying a house, I would pay that off immediately because I want to boost my score for the next 90 days prior to going to see Jay buying your house. That's all I'm saying. So you have to learn how, you can't live at 10% utilization forever. You want to live at 10% utilization when you're like, 3 months from now, I'm going to buy a car. So in 3 months, or those next 3 months, I'm going to get all my utilization down and maximize my score to make sure I get the best interest rate deal in the car or with my bank. Okay? It's not normal life to just have to live in that constrained box. Yes, ma'am.
I just wanted to mention that for buyer beware, the credit cards is, somebody had a renovation and it was, $10,000. And they put on the credit card and there were, 30 days late on it. So we were supposed to pay, say, $500 on it. The credit report only 500, then we put a $10,000. And it'll be a big, huge thing on the credit card, on your credit report.
Yeah, I mean, the credit agency doesn't care about your minimum payment. They're going to report you a 30-day late, which is a totally different entity on that line item. Then they're going to show the minimum payment, which is what it should have been, and then they're going to show the balance. So you're getting hit in multiple areas for a credit card like that, absolutely. But that 30-day late is the killer. It really isn't about the amounts or anything else. A 30-day late on a credit card is huge, massive score decrease.
That was really shocking.
Yeah, 30-day late scores. Any lates, 30, 60, 90, 120, any lates, they're all horrible. They're bad. Yes.
So you're saying how impactful our credit scores are on so many levels. I mean, is there anything that eventually people are working on changing how this whole thing works? Because it's it's just chaos.
They're changing it to make it worse.
Okay. I mean, just like credit history, for example. I mean, if you're 22 years old, your credit history is going to be very different than somebody who's
And you don't
60
need
years
money
old.
to have good credit though.
Right,
So
right.
Here's the two things I can tell you. If you're anybody that has kids, this is what I did for my son because I know what to do for credit, right? So he was 17, I added him as an authorized user to my credit card. He never knew it, he never had it, he never used it. But now he has an established credit score because he has my length of history as a credit card, okay? Then when he got to college, I didn't open him a credit card, he had a credit score, so I told him to open a credit card. He knows exactly how to use that credit card and I get the statement, that was the deal. So that's how you can establish credit. And if you don't have that kind of, help, if you don't have somebody who can be authorized, you do a secure card. It's a deposit. You make a $200 deposit to Open Sky Bank, that's who we use. Open Sky, $200, you have a $200 credit card. It reports exactly the same as any other credit card. What's important though is now you have $200 limit, you only put $20 or less on it, never anymore. If you do that for the next year while that's building, now you will have a great credit score and you can start doing things. It doesn't make sense to just go, I get this all the time, well, I have no credit. Should I go get a car? No, get a credit card.
Yeah.
Because then you get double points. You get payment history and utilization. A car, you just get payment history. So that's why it's important. So if you have a thin credit file, it's always the answer, open a secure card. If you have thin credit.
So playing this game's only gonna get worse, not
Yeah.
better. Okay.
100%. Yeah, I mean, leases. I hear all the time people that, I can't buy a house right now. Guess what? You can't rent an apartment either.
Yeah.
Like,
Oh, yeah.
It's getting worse and worse and worse.
They're taking credit.
You're saying-
Because everybody's out to steal your money. I mean, that's why, ultimately, like if your credit card in the fine print, my credit card, I know that, so I have, let's say, a 9.9% straight credit card for my credit score. If they pull my credit every 6 months, which I know they do, a softball usually, but I know they're doing it, and they see my credit score dip below 700, they can take my 9.9 and make it 16.5. Just based on my credit score, not my payment history to them.
How'd you know it?
It's all in the fine print, because Capital One or any, I hate them, but any bank out there is out to hope they find you with a lower credit score to make more money. That's the bottom line. There's no one out there. That's why I hear all the time, like, well, what if I call and just ask them to forgive that late payment? Yeah, absolutely. I did it. Jaguar, brand new car. They told me they'd do it too. Guess what? They didn't do it. They forgave the late fee. They were super nice to me on the phone. It's not like they were out to get me that person, but the company and the corporation, they want more money. So now I get a higher interest rate potentially. That's what this is all about. And that's why it's getting harder and harder and harder and harder to keep and establish credit. And then on top of that, no one teaches this in school.
That's what I was gonna say.
I took economics at Duke University and I didn't know crap about credit. I can tell you all kinds of things about economics and government and investing and everything else. I knew nothing about credit or how it worked. And it's not taught at the highest level university in the country, in my opinion.
Why is it? I'm sorry.
I think Jay had a quick question. Let me ask Jay. Let me get Jay's question.
No, she can.
Okay, never mind.
Why is it so often that financial advisors will very quickly, if you're trying to establish credit and you're young, the first thing they'll say is, oh, go get a Capital One card.
Because they're easy approval. I hate the bank, and I'll tell you why. This is the only reason why it's personal for our company. If I investigate, let's say you weren't late on your Capital One credit card payment. You weren't 100%. You mailed it on time, or you processed it on time, and they put a 30-day late on you. So it's wrong. You know it's wrong. You have proof it's wrong. If I go investigate Capital One, they have this little disclaimer that says, fine, you want to investigate me, I may close your account. And they do all the time. They'll just close it.
Wow.
I may win the investigation, but you lost your credit card.
Right.
That's why I don't like them. But as far as if you pay your bills on time and everything goes smooth, sure, they're a quick and easy approval source, and they're not as strict. That's why most people tell you to use them.
What would you recommend?
Go into your local bank. Always your local bank. You can talk face to face with somebody. If you can't get approved there, they probably have a secure product. It's the best way to start. You establish that relationship, and you move on to the next card after you show some history. That's what I would say.
Is a postmark considered the date you
Nope.
mailed it?
So, but I mean, yeah, it's considered the day you mailed it, but it's not considered the day that they received it.
Nobody cares when you know it.
Yeah.
I argue on it.
Yeah, pay everything electronic. There's no debating it then. It's much easier, cleaner.
All right, so my question is this, and I have an answer to this already, but I want to hear yours.
Well, it's not.
So I'll hear this from clients and realtors when we're talking about credit and improving their credit score and disputing items and trying to get items removed. If the response is, why should why should this person get this removed? It's their debt, it was their collection, they owe it. Why should they have that removed? Why, you understand what I'm saying?
Yeah.
You know, ethically, they think it's an ethical issue. I would answer, but.
I agree. I'm a very ethical person, and I agree with you. If you're late on your debt, why should you get one over on the bank, right? Is basically what you're asking me. You know, the bottom line is I'm not the judge and jury of the ethics side of this. I'm the judge and jury of did the bank do their job correctly? If they did, I will never win. Let's be honest. If they dotted every I, crossed every T, and did what they were required to do by law on the credit reports, I won't win. However, they don't. So I'm just trying their system, and I'm using their system to prove that they're not doing their job correctly. And that can go both ways, because maybe they misreport something like a foreclosure when it wasn't a foreclosure. That's why we exist, and that's why we're here. Ethically, I won't get into the conversation as far as that with the client. If you ethically want to pay all your bills, do it. Pay all of your collections off. Take the knock on your credit, because guess what? In 7 years, you will rebound from that payment. If you're okay with waiting 7 years for that, do it. That is probably the right thing to do.
And one follow-up to that is, if you dispute something, say a collection.
Okay.
And they.
I do, or if somebody does? Oh, I don't dispute anything.
But,
investigate.
you happen to.
Yeah, okay.
Okay, and it gets removed,
Uh-huh.
okay?
Can it come back?
Can it come back?
Yes. So legally, no. Can it? Yes. And the reason I say that is, by law, if you lose an FCRA investigation, it cannot go back on your credit report by law. But just like before, is there any penalty for violating that law? Nope. So what can happen is, I might get it removed. Jay gets their mortgage, you guys sell them the house, everything's done, and 6 months later, possibly a collection pops back up on there. When that happens, they call me, I don't charge any initiation fee, and I just go after it with a special round of investigations, and I get it removed immediately. Because that's just straight breaking the law. But they do it periodically. Now, the credit bureau is getting better at catching it. We're talking about millions and millions and millions of records. So if some sneaks by, it might sneak by. Does that answer that?
Yeah, that's good. I mean, that's sort of what I say.
Could you talk to us a little bit, if you have time, if you could
I'm good.
tell us a little bit about, because we deal so much with the foreclosure short sale, and back in 07 to 2010, 07 to 2010.
That was our best years. Right after that was our best years. Every credit was wrapped.
Yes, yes, so talk to us a little bit about that.
As far as getting it removed?
Yes.
Yeah, I can remove foreclosure or short sale off the credit. It's usually about a 9-month process though. Those are not overnight. Those are like the toughest of the tough files, but I do absolutely remove foreclosure. Now again, it's still public record. Right, a foreclosure would still possibly show up as a public record, but that's okay. It's like you could have a bankruptcy 2 years ago, you can have a foreclosure 10 years ago. As long as it's, you're meeting those guidelines, but it's off credit, I help your scoring significantly.
Is it true that, because there were about, I would say probably 30% of people that during that time did like a cash for keys, things like that, and they turned the house back over.
Sure.
Is it true that there was a forgiven time for that of 3 years, that once you cleared that 3 years?
Not on credit. There may have been in the mortgage industry, I don't know, where you could redo another mortgage with that 3-year approval. That could have been a canyon for everything, but as far as credit score, that was on there for 7 and 10. Yeah. Again, I don't write the mortgages, so if people ask me mortgage questions, I defer, even if I know the answer, they go ask Jay. When it comes to the mortgage.
If you wanted to pull your credit, like maybe a 22-year-old daughter just came home from college, is it Credit Karma?
That's fine. I mean, you're gonna get 2 of the bureaus, just know that the score is not very accurate, but at least you can see if there's problems. And here's another reason Credit Karma's not that accurate, just so you guys know, it only goes back 2 years. So for a young kid, it's probably plenty.
So that she needs, yeah.
I could have, let's say I filed bankruptcy 4 years ago, and I look at my Credit Karma today, it won't even show that I had bankruptcy. It only goes back 2 years. So my score may look great, but in reality, that's not reality. Okay, it's just a scoring model they use. Thank you so much. Any other questions?
Yes, well, that's
That was phenomenal.
Yeah.
Thank you.
It was wonderful.
Thanks.
To close out a scorecard, never use it, only did it for one.
Sure.
How do you close it?
You just call them up. Number on the back of the card, so I'm gonna close it. They'll try to talk to you to keep you like.
And they
If
cut
you
it
know
out,
it's the right thing to do, close it out. Because if you're gonna have it open, you gotta use it, right? That's the thing. I get a lot of people that have like a 5-year-old Lowe's card, and they're like, I bought that when I was remodeling my house, I got it, I never used it, and then it's like, okay, well, you wanna go to Lowe's every month and buy a Coke, because that will help you, but it makes no sense to close it now because it's 5 years old, you lose all that history. That's the drawback. Once you have them, oftentimes it's just best to keep them. And if you don't use them, like I found a credit file the other day where a guy had a 10-year-old lady. She had a 10-year-old Capital One card. She didn't know she had it. It was still open and active. She didn't have the card anymore. And I was like, call them immediately and get the card number. Even before they send you a card, and then buy something online. Because it's 10 years old and you didn't know about it. And if they close that, you're gonna lose 10 years of credit history. So we cannot let them close that card. So, those are the kind of catches that you'll find a lot of times. People didn't even know they have that card anymore. And the banks will close them if you don't use them. It can be bad for your credit score. Okay?
Thank you.
I have a stack of cards. I was just gonna leave here so that way whoever wants them, you can keep them wherever you like. Thank you so much.
Thank you.
Thank you, ma'am.
I think your emails.
Oh, do you?
Definitely.
Yeah, we'll update it and get everything. My smiling face.
Yeah. You said, got my smile on your face there too.
I like it. And,
Amadone.
yeah, mine is on the front of my phone, my dog. Oh, both the AC.
Hey, oh, there you go.
Yorkie, yes.
We did DNA, sent away for DNA.
Thank you, sir.
See what Daisy is?
Thank you so much. Pleasure meeting you.
We haven't got the
Thank you.
answer yet.
Oh, yeah.
Yeah, so we'll find out what dog she is. We don't know if she's in rescue.
Thank you so much.
Thanks, so we do a real part.
Have you done the 23andMe for yourself?
No.
I want to do it.
I don't know. For one thing,
The government already has my DNA. I was military, so.
I think of myself as 100% Italian, although I'm probably not. So I don't even want to hear about it.
I know a couple generations down.
And further, if I ever murder somebody, I don't want to get it done.
It's like too much
Like
information.
I said, I'm already in their database, so I can't do anything about that one. Your government, they got all my DNA.
Where's your card?
Oh, my cards are right there on the counter. Here, I'll steal that one from you. Thank you so much.
So my husband has a similar story. He went to the Marine Corps
Mhm.
at 17, and he stayed 15 years in the White House, communications. He was a bodybuilder, and he
Oh,
was
nice.
working at a gym on Stafford, and he quit to go run the gyms for them.
Yeah, wow, that's
And
what I
he
did.
it,
I
yeah.
was tired of it. I didn't
I
want
just
to
had
do any more military government related stuff.
Well, he worked at Social Security. You get updates, Social Security sends you what you paid and what you're gonna
Think
get.
about this.
You know, $15,000.
They're hard to tell because they're already.
I mean, it's not good on marriage, it's not good on you.
Sure. When he was on government stuff or?
How much?
Yeah,
Yeah.
military.
Yeah.
It's 2 minutes.
I was I mean, obviously a little bit later in life when I was in, I was
She'll do it.
99 to 2005.
And I was like, what are you watching? I got it upstairs.
I mean, okay. Right, really made a lot of
That time is
sense.
gonna go up.
Your trip. I think I'm on this, hang out at your house one time. And just watch a two you all
That-
I think it'd be hilarious.
Last time we were arguing
Every
every
day.
day.
Just, I didn't want to-
Just an argument.
Gym's made me happy for a long time. I love this even more though. I have so much fun doing this. I miss the gym every once in a while.
Are you sure?
I can always open it up. We have 3 of them,
Yeah.
so.
Yeah.
Done that
You
many
just want
times.
somebody to say,
We did open a gym.
yes,
There's a lot of them.
You're saying, it's the same. I
Yeah.
understand those signs.
Oh, nice.
She's like,
Yeah.
Loudoun County.
listen, all these Republicans are voting their way. I'm like, all the Democrats are voting. But they're all in their party lines too.
That's what matters.
Yeah.
All right, well, I'll get out of
Yes,
here.
you
Call
have
the
a good
office
time.
here. Yeah, thank you.
Do I have, a personal conversation?
Sure.
So I'm going through
Sorry about that. I've done that.
I don't eat gluten and I ate some today
And
and
I'm still.
so, that's why. I feel-
Yeah, I said it.
Well, 25 years in.
The good thing I'm not.
Who's your, oh, your vegetable. Isn't that little graduation party for my daughter Emily tomorrow? And, I was asking about bakeries, right, and she said Chandler's, that's the middle of all the bakery, right?
We should get their cinema. They used to be up there down in the.
Right.
And that were they.
So this is TJ Maxx, Kroger.
Yeah. Their cinema is good. I've never done, oh, I used to buy them. They said it's. They have it all decorated. No, it'd be all decorated. I mean, just with the ice.
Okay, and then you put your own
You need your own decorative markets. It's like, I think $60.
That's what I meant.
Because it's just done, it's like, it's tired of it, it's too big.
Right, yeah, it sounds kind of fun to roll there.
Yeah, then where are you gonna put it?
We incorporate.
Right, I know so many go here at Chandler's to go. Look at some cakes.
Is it your mom?
Yeah. His mother, son. I'm taking her.
Sure.
A lot of buildings around here, but she seems to want to go with the old timer.
And what's she having this cake for?
She graduated college, this is early, she's 22.
Oh, she had the winter.
3.5 years.
Oh, excellent.
Oh.
Okay, and when is this party?
Tomorrow, like 15 minutes.
So you might have a little bit of surprise.
That's pretty good.
They just ordered.
Well, it's a cake, I just say happy graduation, she's like 15,
Oh,
it's not like that.
okay.
It's a lot of time. But,
The judge was separate.
and do I buy a cake a day before? I don't know.
She tells you that.
He told me.
He said, I was just at home. And he said, I
He just needed to come by. I thought he was coming by to meet
met
you.
someone to Steve and to in such a short time, because I'm not reading. In such a short time, he said, you are served, Mr. Khan. He said, the other thing is, you're so passionate. Because I still have compassion, right?
Sure.
What do you want?
Well, I think, yeah, so we just need to do a sample to see what your social.
Yeah.
I'm just. So we will have a master copy, true.
Oh, you do?
Give me till like when you're.